Hello, everyone. Happy New Year, and welcome to the first weekly roundup for the year. Today, we will cover geopolitics, economic data, and market sentiments. Hello, Ben.
Hi, Eva. Happy New Year.
Happy New Year. We're back.
We are back. We had a little break. We had a week off, I
Yeah,
think. Yeah,
yeah, yeah.
2 weeks, 2 weeks.
Uh, 2 weeks, yeah.
Yeah.
A couple of things to unpack. Lots has happened in this short year already. We're going to start off with possibly the biggest geopolitical development so far this year, the US intervention in Venezuela. What does this mean for commodities markets and how could Canadian energy companies be affected? Unpack it for us.
I will try. I like how you said intervention.
French.
Intervention. That's a good way to describe it. Yeah, look, it's shocking, really. It is. Um, the there'd been obviously lots of threats about what was going on. Trump had been dancing around what was happening with Venezuela, targeting drug boats and trying to take tankers, and a lot of activity around Venezuela. And if you look at it from a pure economic sense, it is a direct attack on the relationship with Canada, is we ship heavy crude to the US, and the US is reliant on that for their refineries. And so if they're able to get heavy crude from somewhere else, a country they own or are affiliated with in some way, shape, or form, then that's going to real put a big challenge on the Canadian heavy crude market and Canada in general. So initial view, I guess, from Canadian people in the oil patch that I talked to seem to think, oh, it's nothing to worry about because it's so far off into the future. I would tend to disagree with that. I think that it's pretty material if they have the ability to access a couple billion barrels a day of heavy crude that doesn't ship from Canada. That has a big impact on what we're going to do with no refineries here either. That, I'm not exactly sure what that ramifications would be on the Canadian economy, but it would be negative. And so I'm sure Carney and team have some thinking around what and how they're going to prepare for this. It's true there would be a buildup because there is a theory as well that the infrastructure in Venezuela has deteriorated, and I'm sure that's the case. I don't think it's maybe as dire as everyone seems to indicate. He is Maduro has taken land like he went into Guyana and effectively took over a piece of their country that he said was their oil reserve because it was connected to the Venezuelan oil reserve. So, there's lots of oil there, and the infrastructure is probably not quite as bad, I think, as everyone thinks. So it's material. And as things continue on, Trump has said effectively that they're going to try to have some U.S. Control in Venezuela. So I think it's a material event, and the knock-ons, of course, of taking over Greenland and Cuba and Colombia and potentially, obviously they had potentially Panama as well. I think it's shocking that the market hasn't reacted differently to it. But I think we're going to have to start taking him on his word.
This is definitely something to keep an eye on.
For sure.
Okay, speaking in Canadian economy, PMI and job numbers were recently released. Um, what do these numbers tell us about the direction of interest rates and the likelihood of further cuts in Canada this year?
Yeah, so I think we were coming into this year pretty neutral, like likelihood of a hold in January. I'm still leaning towards the view that I think rates come down one more time in Canada. Not sure that aligns with every other economist view at this point. But judging what we saw recently, to your point, is that things are a little bit softer than expected. And so we went from, is really kind of a 0% chance of a cut at the end of January to something around 25% chance of a cut right now. So I think as the numbers continue to come out, if they are weak, we also saw weak housing numbers in Toronto yesterday, third straight month of a decline in housing prices. So, I still think those are going to play a part into what happens with interest rates. Yeah, we're probably near the end of this cycle, barring a material recession. Um, we would need something to change for us to cut materially more than this. And, so I think rates maybe one more, but likely we are on hold for a while. If you pull the consensus of the Canadian economists, they think that rates get cut or sorry, rates get starting to increase in the last quarter of this year. But, we have a lot of ground to cover before there, so I wouldn't put a lot of weight into that.
Okay. Back to the commodities markets, specifically gold and silver prices. They are becoming overheated. Is this a market thing or global events playing a role? And should investors be cautious now?
It's a great question. I think it's something that I'm wrestling with at this point. I think that when asset prices go up as materially as gold and silver have in the past 12 months, it starts to make you think what happens from here. The other thing that you'd look at is I was hard pressed to find a forecaster that says that gold and silver are going to be lower 12 months from now. And that's a big warning sign for me. When you have everybody saying something's going up from here, that causes me a lot of concern. So the fundamental case, though, like it's incredible. Of course, you should own gold. Like geopolitics is out of control, the currency. There's so many fundamental reasons why you should own it. But when everything says yes, you need to do this, that's probably not necessarily the right thing to do. Um, so yes, so for gold and silver, frothy, I think as I mentioned in one of the dailies this week, and it's something that's causing me some concern and some more direct attention around profit taking. The question I guess I've been wrestling with is where to go with the money. But definitely starting to get more and more concerned that we're, if not at the end of the this current move, certainly very close to it.
Okay. Good. Let's see the charts.
Let me know if you can see that.
Not yet, but I think it's coming. Okay. There you go. Up now.
So, okay, perfect. All right. Well, as no January 8th, 1 o'clock. We're recording this 1:08 actually right now on the 8th of January. So that's good luck. First one in 2026. So looking forward to an interesting year as they always are. So we'll go through a couple of different charts today, sentiment, what's going on, how people are feeling. I know I've shared this one in the past. It's from our Chief Investment Office team. I think it's a great way to think about sentiment. And so, there's everybody looks at the world a little bit differently, but sentiment is, I think, a key driver for what happens to asset prices. And so this is a look at momentum, volatility, breadth. That means how many stocks are participating, risk appetite, speculation in the surveys. So momentum here is picking up. And so this little squiggle here is last week's. So we've had a shift from, on the edge of extreme pessimism to tipping up to optimism. And so that's interesting. So I'd certainly pay attention to that as you get a movement towards the optimism side. This is a sell signal, buy signal, sell signal. So that's the way I would view this gauge. And so I think it's an important piece of information that I look at on a weekly basis to assess the kind of how big picture the market's feeling about the world. So as I mentioned, as we talked, Eva, off the top here, just about central banks, interest rates, what's happening, what's going on. And so this is our most recent data set. So this was as of Monday, I guess. So 21% chance of likelihood of a cut. So it was zero coming into this year. Now we're starting to lean towards potentially. So as you can see here, you got kind of the futures market pricing in 5 basis points. So it's telling you that potentially we're going to get a cut. And then the US here at 4 basis points. But as I mentioned, between now and the end of this month, we have tons of information, tons of data to come out in both Canada and the US before we get there, which could tip the scale in either direction. And as we know, last year there were tons of swings and cut, not cut, cut, not cut. Looking at these numbers right now doesn't give me any material view on whether we're going to have a cut into this month, but we're starting to tilt towards that based on the current data that's come out. US gives a little more guidance on forward rate cuts. And so it looks like right now that they're starting to price in at least a few next year or this year, excuse me, in the US. And so that's something I'd be conscious of. And, depending on what happens when Powell gets replaced in May, I think we could see this number change materially if it's quite a pro-Trump central bank. Europe kind of pegged at the 2%, pretty close to where we are. I'd say there's no real reason that you would see this change materially unless you get a collapse in the European economy or you get a reacceleration in inflation, which I don't see either of those things happening right now. So Europe's kind of in a hold mode right now. So that gives you a little bit to think about from a perspective of what happens from here. And on this chart, and I put this chart up a few times last year as the viewers that watch frequently would see this. So this is gold, the red line tilting up, overlaid with WTI oil. And so these are things that I think they often when you get these are the alligators as I talk about. Alligators are always closed. And so the question of what happens from here, do we get a reacceleration? All the fundamental reasons around why gold should go higher. The answer is maybe that happens. But what could potentially happen too, I mean, in the US, if we get some of the things that's proposed to be implemented in the US, and you get a small ratcheting back of what President Trump's been doing on the geopolitics side, you could see these things change quickly where Trump has suggested that he's going to stimulate the economy a lot this year fiscally. And so if we get fiscal plus monetary, plus we get this corporate tax cuts that are coming in, and we get a bit more calm on the geopolitical side, I think you could see a close of this, which ultimately results in probably higher oil prices and lower gold prices. So this is something that's causing me a lot of time and attention to see where are the opportunities on a profit taking, but also where are the opportunities on an investment perspective at oil at these levels. So a real important chart that I think we need to look back on 12 months from now and see what it looks like. As always, the opinions expressed do not necessarily reflect those National Bank Financial. If you have any questions at any point, certainly feel free to reach out to myself or your advisor. If there's something specific that you think you want to talk about, please let us know. Everyone's risk factor is a little bit different, so take that into consideration when you're assessing the information that I'm sharing with you today. That's it on the charts today.
Thank you, Ben.
Welcome.
So what's on the agenda for next week?
Well, it seems like this week the market's back to work. And so there's so much to go through, really. The amount of research that comes out now and the speed at which that research comes out now is incredible. The Twitter sphere, I guess not that exosphere, you can't really even say that, provides so much information on real time that I'm still digesting that. As you know, we have the January 29th outlook, which you're going to talk about. So preparing for that and looking at all the data that's out there. As we head into the start of every new year, it's, I think, a real big time for me to assess what happened last year. As the year progresses, when you're making investment decisions, you just get locked in this loop of looking for the opportunities, moving to the next one, making adjustments. As we wrap into the end of the year, lots of tax changes we are made. And so now that all that's been digested and dealt with, now we start to look out what's changed, what's new, what's different. And so lots of time spent on research and preparing, and then looking to make some implemented changes into the portfolios as we get into the start of this year.
Sure. And contributions. Time for
And
a reset.
exactly.
Okay, great. Uh, like Ben had said, our annual outlook for 2026 will hold on January 29th at 12:30 p.m. I would be sending out the invitation to everyone shortly. Thank you everyone for listening. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeats will be in the caption of the video and in your email box. For our clients, please reach out to me if you have any questions or if you'd like to book a review meeting with Ben. Thank you everyone for listening again and have a great year ahead. Bye.
Let's go. Thank you. Bye.